Okay, before I even get started, just so you all know, I just announced it to my dean, who's my boss, because I wanted her to know first, but I am pregnant. Another reason why
Yay!
Congratulations.
Congratulations. Woo!
Congratulations.
So, yes, my daughter will have a little friend soon in February, so don't worry, it's not the semester.
Do we know boy or girl, or are you gonna wait yet?
Little girl.
Yay.
So my daughter got her wish. She wanted a sister, and she's getting a sister. So she's very excited.
What a blessing. Congratulations.
Thank you so much. But bear with me, because if I drink too much water before class, I may have to run to the bathroom. I may have to take a few more breaks than usual.
Yeah, we need to get that baby healthy and ready to come into the world.
Yep, just try to do that. So thank you guys for all of your congratulations. I appreciate it. And bear with me, because pregnancy brain is legitimate and real. I have it up here and knowledgeable, but sometimes it's hard to retrieve the information when you guys ask a question. So I apologize in advance, but I will address your question eventually, whenever it comes back. Been through this rodeo before, so I know it does come back, but sometimes it's just not quite when I want it. So today,
are you gonna get like COVID syndrome or whatever, like sympathetic pregnancy?
I mean, you guys could all snack along with me.
Right.
That's something I can get behind.
But yes, if you're going out and having a cocktail, drink one for me.
Or not.
I will not be partaking until February. But I just wanted to let you guys all know that, so that you're all aware.
You have a name?
That's the big debate. But no clue. With my first daughter, I knew exactly what I wanted to name her, and my husband didn't really have a choice in it, because I knew what I wanted to name my daughter. With this,
Can we ask what your daughter's name is?
Isabella.
Isabella.
Yeah. Second one, no clue. So yeah, that'll be fine.
We're gonna start a group suggestion and the let's collaborate. We're gonna put names up.
Totally fine. I'll accept it.
Genius.
Okay, let's get started on this. Before we start chapter 2, I want you to have a solid understanding of the different account types and what financial statement these items are on, so that you guys feel more confident starting chapter 2. Chapter 2 is transaction analysis. So we're getting into the details now. Chapter 1 was the big overview. We're looking at the financial statements, getting an understanding of financial accounting. But chapter 2 is all about the details. And now I don't have to speak in vague terms about things, because we're going to be addressing those. And going forward, you're going to have so much knowledge that you need for the remaining chapters in this class. This chapter by far is the most important chapter to financial accounting. So what I want you to do is go through this list, and I want you to identify the account type. For some of them, they're not accounts, so I put not applicable for them. And in addition to identifying the account type, so asset, liability, stockholders' equity, revenue or expense, I want you to tell me what financial statement you're going to find it on. For the most part, it will be only one, but there are some exceptions here that it could be on multiple. But if your gut is just to check all of them, know that that's probably not what you should be doing. So take a few minutes, go through this list. And I'm going to pause the video. Okay, so common stock. What type of account is it?
Stockholders
equity.
Stockholders' equity. Okay, so in what financial statement am I going to find common stock on?
The balance sheet.
Correct, the balance sheet.
And also retained earnings, right?
Nope, just the balance sheet. So stockholders' equity is that weird account category that you could find it on several different financial statements, but in this case, common stock is only found on statement or on the balance sheet. Income tax payable.
The liability.
Liabilities. So right here, payable, we know it's a liability. It's an amount owed for income taxes. What financial statement am I going to find income tax?
Income statement.
The balance sheet.
Balance.
Amounts owed are on the balance sheet. Dividends. Dividends are what type of an account?
Stockholder equity.
Equity.
Stockholders' equity. I am seeing the chat responses, and you are correct. Stockholders' equity account. Where are dividends going to show up?
Balance statement and retained earnings.
Statement of retained earnings only.
Huh.
Statement of retained earnings.
As an individual like line, right? But then that has a relationship to the balance statement when you do the balance statement because of the retained earnings.
Balance sheet, it flows through, but it's not directly on the balance sheet. It's only in the statement of retained earnings. Because the way it's related to the balance sheet is that you have to calculate the ending balance of retained earnings. And to calculate the ending balance of retained earnings, part of that is having dividends, subtracting out dividends. So it's only on the statement of retained earnings. Don't think about where stuff goes after that. Income tax expense.
Liability.
Expense. So what's the difference between income tax payable and income tax expense?
Tax payable is a liability because it can be paid in the future.
So income tax payable is amount owed for income taxes that's been incurred, right? You're going to pay it off in the future. Income tax expense is the amount of income tax that you've incurred during this current year and that you're expensing in this current year. So where is income tax expense going to be shown?
Income statement.
Income statement. The ending balance of retained earnings. So obviously retained earnings is a stockholders equity account, but it's not asking for, it's looking at something specific, just the ending balance. Where do I see the ending balance of the statement of retained earnings?
Cash flows.
So Warren got the first one, statement of retained earnings. Where else do I see the ending balance of retained earnings?
Balance sheet.
The balance sheet, correct. So remember that in order to balance the balance sheet, we need the ending balance of retained earnings from the statement of retained earnings. So it flows from the statement of retained earnings to the balance sheet. Total assets is the sum. It's the sum of all of our assets, right? So total assets is not an account. It's a sum. Where do I see total asset?
Balance sheet.
Balance sheet.
Yep. Guys have been practicing, I'm glad. Long-term debt. Long-term debt.
It's a liability.
Balance sheet.
Liability and
Liability.
liabilities are in the balance sheet. What's another name for long-term debt?
Notes payable.
Yep.
We gotta pay attention to those words, right? Payable and receivable.
Correct.
And
There's a
on
difference.
account. That it gets tricky in the homework.
Yep, we'll get into that today. Don't worry. Revenue. What type of an
Income.
account?
Revenue.
Revenue.
Revenue. Oh, I'm sorry.
Revenue.
It's a trick. It's revenue. That one was tricky. Just kidding. What financial statement is it in?
Income
Income
statement.
statement.
Income statement. Right. So on that income statement, we have revenues minus our expenses, right? Equals net income, hopefully.
Mhm.
Sometimes it's a net loss. For I, cash spent to acquire a building.
Liability.
Just
No.
shrinks an asset and grows other
Asset.
assets.
It's an asset and retained earnings because it's a long-term investment.
Okay, notice it doesn't say building. It says cash spent to acquire a building.
So it's a transaction, right? And it's an increase of an asset because we're in a decrease of an asset because
So
we're spending cash and getting an asset.
in the balance sheet, we show the balance as of a specific date of our.
It's a cash flow, statement of cash flow.
Yep, Niru is correct. It's a trick one. This is a statement of cash flow item. So you
Okay.
see the balance of the building with all of the historical cost of all the buildings that we currently own in the balance sheet, but cash spent to purchase a new building is going to be a statement of cash flow item only.
But it adds to our assets though, right?
It does add to our assets, yes.
On the balance sheet, right?
Correct. It's going to influence the balance sheet. And it is an investing activity. Yes, that's correct. I will include that.
So then it also has to do with retained earnings at a certain level, or no? Okay.
Assets don't have anything to do with statement of retained earnings. Okay. J, selling general and administrative expenses.
Income statement.
Expense.
It's in the income statement, correct. It's a subtotal in the income statement.
Professor Wade,
Yes.
what's an example of selling general and administration expenses?
Salaries expense,
Okay.
wage expense, rent expense,
Okay.
all of your normal operational expenses for running the business.
Got it. Thank you.
If you look at a lot of financial statements, it's just basically they took almost all their expenses that are operating expenses and lumped it together in this category.
Okay.
And
So
depending on what the business does, they're going to have different expenses that are included, but all of those are considered operating expenses for companies.
Where
if
did
it's an
this,
operating expense, wouldn't it be also in the statement of cash flows?
It doesn't say cash spent.
Okay.
where did the science of accounting start? When did this start to really get built out, like the architecture of it? Was
1200.
it like with the Medici family, probably in like Italy, or
It was an Italian in 1200 BC. I'll find the
Yeah.
exact information later.
it's got to be the Medici banking family, right?
I can't remember exactly who it was. For K, adjustments to reconcile net income to a cash basis. Where do we?
Statement.
Statement of cash flows.
Yep, statement of cash flows. What category was that in? What activity?
Just
Operating?
yeah.
Yes.
Yep, right after net income is where you'll see that line. Ending balance of cash. Ending balance of cash. Where am I going to see the ending balance of cash? And this is going to help you with problem number 5 in your chapter 1 homework.
Statement of cash
Statement
flow.
of cash flow.
Statement of cash flow is 1.
And
Yes,
the balance sheet.
and the balance sheet. So if your balance sheet does not balance because you need that cash value, you need to go to the statement of cash flow to get the ending balance of cash and drag it up.
Yes. And everybody write their numbers, double check them multiple times.
Always double check your numbers because math errors happen all the time. And I transpose numbers all the time when I'm writing them down. So double check what you're writing against what's given to you. M, current liabilities. Where do I see current liabilities? Which financial statement?
Balance sheet.
Balance sheet.
Balance sheet. I will tell you this, you're doing a lot better than most semesters. So good job. These are not easy. You guys just learned them.
Yeah.
Net income.
Income statement.
Statement.
Income statement. Yep. And
Cash flow.
Statement of retained earnings.
statement of retained earnings and the statement of cash flow. So there's 3 places. So I'll do a little.
Oh. Operating activities. Cash.
So in that statement of
Because like I was putting down, but I mean no, because everything is metal. You know?
in that statement of retained earnings, you see your beginning balance retained earnings plus net income, right? From the income statement, minus your dividends gives you your ending balance of retained earnings. So that net income is coming from our income statement. And our balance sheet, we see that assets equal liabilities plus stockholders' equity. And under the stockholders' equity section, we see the ending balance of retained earnings, right?
See.
In our statement of cash flow, it's just showing us how we received cash during the period and how we spent cash during the period. And we categorize it as either operating activities, investing activities, or financing activities. And we're using all of the information from the previous 3 statements to address and calculate the change in cash from the beginning of the year, what we started with, to the end of the year, what our ending balance is. The quicker you learn to identify the specific accounts and what account type they are, the easier the financial statements and preparing the financial statements are. Because if you know that this account is an asset, cash is an asset, you know that cash is going to be on the balance sheet.
And our grouping.
Accounts receivable is an asset, inventory, etc. You know exactly where it's going to end up in the financial statements. Terry.
I was going to say, in the group, when we were talking, we kind of came up with a consensus that we wanted to run by you as it pertains to business and accounting. Mm-hmm. The ultimate asset and the ultimate liability in a business is cash.
Cash is not a liability ever.
But unless it's, what about if it's a note payable? Then it is a liability.
It's an amount that you borrowed. So you have a borrowing. Right. Sometimes borrowing cash, there's a strategic reason for that. And we'll get into it in a later chapter. Okay. But yes, if you don't have cash flow, if you don't have ample cash flow, if you don't have cash coming in from your customers, there's no way you're going to ultimately run your business.
It's a liability, right? So if I got to let people go and fire them.
Not a liability.
All right.
Okay. Specifically, how do you have any questions on this? Is there anything you can't read, or are you guys ready to move on?
What's the best way to say this? Just go over it, because I was a little bit lost when we were going through this.
So, in order to digest these terms and figure out what they classify as, right? Asset, liability, stockholders' equity, revenue, expense. Once you know what type of an account it is, then you'll know what financial statement it ends up on. So okay. I would focus that first. I would do flashcards, to be quite honest.
Okay.
Like paper flashcards is what I would prefer to do, just because that's what I feel most confident, because writing out the definition of it, writing out what statement it's on, what account type it is going to help you kind of with the muscle memory and practicing it. And then you flip it over and go through it until you really know these.
Okay.
And the faster that you can kind of classify it, the easier that this next chapter will be for you as well.
Okay. So finding what type of account type it is, it'll be easier to find what part of the financial statement it belongs to.
Correct.
Okay.
And on your flashcards, I would include what financial statement it's on. And I would also have just a flashcard that shows, okay, the income statement consists of what? Revenues and expenses equals net income. Right? What's on the statement of retained earnings, the balance sheet, statement of cash flow, etc. But really focusing in on accounts is going to help you a lot.
Thank you.
You're welcome.
Never mind.
Oh, no, you're fine. What's up?
I was just trying to see if you could scroll down to the net income. I couldn't see it all the way.
Oh, okay. So you need to see N, line N.
Yes.
There.
Thank you.
Sometimes scrolling up or down is like the opposite of what I think it should be. Any other questions before I move on?
Oh, Professor,
Yes.
can you like scroll up a little bit so I can take a picture of it?
Can I do it at the break for you, Tristan?
You said what?
Can I do it at the break?
Yeah, that's fine. Yeah.
Okay, perfect. Thank you.
Yep.
Okay, you guys ready?
Yeah.
Yes.
Okay. So chapter 2 is all about transaction. We're going to get into debits and credits. We're going to get into journal entries, T accounts, all of that fun stuff that you read about. We're going to start at the transactional level first and understanding what a transaction is before we move on. So a transaction is a business event, and I'll include the word business, a business event that has a financial impact on the business. So there are events. When I walk into Target, it's a business event. But when I walk into Target, Target does not have a transaction until I do something. As a customer, I have to go up and decide if I purchase something from them. Business events that have a financial impact on the business need to also be able to be measurable, so reliably measured. And every transaction has both sides, has two sides. What's given and what's received. And with every transaction, we're thinking of it from the business's perspective. What is the business giving and what is the business receiving in this particular business event? If an event happens and there is nothing given and nothing is received, then that means that that's not a transaction. And that means that we have nothing to record. Business events happen all the time. We have nothing to record from an accounting perspective.
Can you give an example of that? Sorry, Professor.
I walk into Target is a business event.
Okay, thank you.
Okay. But I haven't done anything. In order for it to be a transaction for Target, I have to give them something and they have to, in return, they will have to give me something, and in return, they'll also receive something. So in order for Target to have a business transaction involving me, a customer, what do I give Target? So what is Target going to receive?
Money.
Cash, some sort of currency, right? In return, what is Target giving To me, the customer.
Goods.
Services.
Goods, the purchases that I'm making, right? And how is that reliably measured? How can I quantify that transaction?
Historical cost principle, or like the reliability assumption that the dollars going to be
We're
the
going
same?
to go even simpler than that. I go into Target and Target has a selling price for this pen, let's say, of $2, right? The agreed upon selling price, that's the cost, or not the cost, but the selling price. So I give Target $2 plus the tax, right? Because I have to pay taxes in California. And in return, Target's giving me the pen. I've given Target $2, so they're receiving $2 in currency from me. In return, they're giving me a pen, and they get to recognize revenue from that transaction because they've given something to me, the pen, and they've received something from me, the customer, cash. And yes, the way that they're verifying that transaction, Yachty, is that receipt. Yes, boo taxes. In accounting, we're going to record both sides of the transaction. So this goes back to maintaining our accounting equation balance. Remember, assets always equaling liabilities plus stockholders' equity. Every transaction that we record both what is given by the company and what is received by the company. So when we record transactions, we will always maintain the balance of the accounting equation.
Question, Professor Wade, with your notes, when you do like the double underline on certain words, is that like the ending balance for you? Is that like a...
No, it's just kind of key information. Okay, in the chapter handout on the first page, there is a practice problem that I want you to go through. So I don't care about addressing what a transaction is because a transaction is a business event that has a financial impact and it's measurable and it has two sides, period. That's given up above. But I want you to look at these events that happen and indicate which of the following events would be considered a transaction of Baskin Real Estate Services, Inc. So the company that you're looking at to determine if it's a business transaction is Baskin Real Estate Services, Inc.
So are we setting up like a cash flow statement right now? Who agreed to pay $1,000 a month for managing some rental property? That's like an oral contract, right? They agreed to it. He's gonna pay him.
It could it could be a written contract too.
But either one, right? So isn't that actually a transaction because it's a promise to pay?
Nope. It's not a promise to pay. They just, in order for it to be a promise to pay, we would have had to already perform a service. We haven't done anything.
Okay, so we haven't fulfilled our side of the promise yet until we actually manage the property for a day.
Correct.
Okay.
We haven't earned anything. We haven't performed a service for them yet. All we have is an agreement between two parties. That's it.
But can that be a liability then if we don't perform on that service and we agreed and they're like, hey, because they haven't paid us money yet, right?
We won't even
So
go forward with it. Yeah.
All right.
Only worry about right here where it says the account, because what you see below is actually an Excel spreadsheet. And if you don't have Excel, don't worry, because you can use Google Sheets or the Mac equivalent. I think it's Apple Numbers or something like that to open it to see. So we're going to go through and talk about the account. And I'm just going to refresh your memory on the accounting equation. So assets equals liabilities plus stockholders' equity. So these are the components of the accounting equation. Yes, you can download the file without Microsoft. I'll explain how to do it later. So Under each of these components, you're going to have a number of accounts. The account is a record of each asset, liability, and stockholders' equity element. So under assets, we have a number of accounts. And in every account, we're showing the same types of information. So in every asset account, you're going to see a beginning balance, what increased, so the transactions that increased this account during the period, the transactions that decreased the account during the period, and beginning balance plus the increases minus those decreases is how we calculate the ending balance of each of our asset, liability, and stockholders' equity accounts. The hardest thing to identify when you're starting out in financial accounting is what specific accounts are impacted by certain transactions. So what I've done in this Excel spreadsheet that I posted in the chat was I broke it down by asset, liability, stockholders' equity, and I also then summarized what you would see in the financial statements as. And I gave you a list of common accounts that you're going to see and use in this class. Is this an extensive list of all of the accounts? No. We're going to add on to them. But at least you'll have an idea of some accounts that you're going to be using quite regularly in this class. So I'm going to go to my Excel spreadsheet for you and kind of explain what I've done. Trying to get rid of this. There we go. So I'm sorry, when I copied and pasted it from Excel into OneNote, it kind of got the formatting wrong a little bit. But these two columns are assets. I broke it down by current assets and long-term assets. These next two columns are liabilities, current liabilities, and then long-term liabilities. And then stockholders' equity is the last four columns. And paid in capital accounts, and then retained earnings and all of the retained earning accounts that we see. So underneath assets, I gave you the definition of what a current asset is versus what a long-term asset is. And I even listed them in liquidity order, so the order that you would see it in the balance sheet. So the purple, the bold purple information is what you would see it summarized in the balance sheet. Cash and cash equivalents is the summary of all of our cash and cash equivalent accounts. So I could have one cash account or I could have 200. Every single bank account that I have, I'm going to have an individual account established in my accounting records to keep track of the increases and decreases and the changes in that account during a period of time. So if I have cash in bank 1, cash in bank 2, savings accounts, money market accounts, and then petty cash account, I'm going to add up those ending balances, and that's what's going to be reported as cash and cash equivalents in my balance sheet at period end. And then short-term investments, accounts receivable, notes receivable that have a term of 3 to 12 months, inventory, prepaid expenses. These are all examples of current assets. And we'll get into the definition at a later point. But accounts receivable, we already went over. It's amounts owed to us from our customers from providing goods or services in advance. Notes receivable is the opposite of notes payable. We've lent out money to another party, and they are expected to pay us back that amount that we lent them, plus interest, because we're going to charge them interest if we're lending them money, right? For long-term assets, I went through examples: long-term investments, long-term notes receivable, so notes that have a term of greater than 1 year from the balance sheet date, meaning that the amount is owed to us back greater than 1 year out. Property, plant, and equipment assets, and the accounts that are normally property, plant, and equipment. Land, furniture, fixtures, and expenses, or equipment, sorry. Building, equipment, computers, vehicles. Intangible assets, patents, trademarks, trade names, goodwill, copyrights. Guess what? You're probably like, what are we talking about here? In chapter 4, we're going to get into the details of cash and cash equivalents. In chapter 5, we're going to get into the details of accounts receivable and notes receivable. In chapter 3, we'll get into prepaids. In chapter 6, we're going to get into inventory. All of these things we'll get into in further detail later on. And then I went through and did the same thing with liabilities, separating current liabilities from long-term liabilities. Notice that most of these say payable: salaries payable, vacations payable, utilities payable, and then long-term notes payable and bonds payable are the two main long-term liability accounts. Terry, do you have a question? Okay. For stockholders' equity, under paid-in capital, it's only a few accounts: common stock, additional paid-in capital, and then treasury stock. And we'll talk more about that in chapter 10. Retained earnings, I broke it down by dividends, revenue, and I gave you some specific revenue accounts that we're going to be dealing with in this class. Depending on what the company does, whether or not they provide goods to their customers or services to their customers, or what kind of revenue they're earning, you're going to have a different type of revenue account. So if I'm in the business of renting out buildings or renting out rooms, I'm going to have rent revenue. If I'm in the business of selling food and beverage, I'm going to have food and beverage revenue. If I'm in the business of selling a service, service revenue. And then expenses, and this is a much smaller list of expense accounts than you'll ever deal with. There's thousands of expenses that could potentially come up. Rent expense, salaries and wage expense, advertising expense, insurance expense, sales commissions, cost of goods sold, fuel expense, travel expense. Think of your personal life, what expenses you incur on a daily basis, on a monthly basis, quarterly basis. We all have expenses. We're all familiar with them. Same with businesses. This is just kind of a snapshot and a reference that can help you when we get into recording transactions. You're going to want this. Don't feel like you have to memorize it at all, but it's a reference for you so you feel more confident going forward. That being said,
Would we be allowed to use this on a test?
what was that?
Are we allowed to use it on a test?
Yes, because your tests are open note, open book.
Oh, yeah.
But it is time, so you have to practice. Miguel, did you have a question?
No.
Okay. Okay. We're going to move into the next part. We're going to look at the impact of business transactions on the accounting equation. So we're going to put into play those accounts. And what I want you to do is write out this chart over here. And we're going to go through each of these transactions or business events together. Then you're going to do it on your own.
So would we record each of these transactions in 2 spots or just in 1 spot?
I'm going to show you.
Okay.
Should we write the stuff that's on the left side, or do you want us just to write the dates?
Don't worry about the stuff on the left side because you can refer back to the PowerPoint for it. Write the date, write the stuff at the top. So at the top, what I did is I wrote the accounting equation, assets equals liabilities plus stockholders' equity. Then I color coded some things. I color coded the accounts that we're going to be using and identified whether or not they're assets, liabilities, or stockholders' equity. And yes, having colorful pens will help you in this class. And then along the left-hand side, we have the dates. And I do want you to note that August 1st is the beginning balance, and then August 31st is the ending balance because we're going to be looking at a month worth of transactions. So transactions that happen for the month of August.
Why is there August 31st?
Because there are 3 separate transactions that happen on August 31st.
Oh, okay.
Yeah. So as you're writing this, every transaction is recorded separately. And this is part of how we record transactions, but when it goes into the system, it does not look like what you see on the right-hand side. This is actually happening in our minds. But this is a good way to start kind of understanding how we're looking at transactions and figuring out what accounts are impacted and what impact it has on the accounting equation for each of these transactions. And that's why we're starting with it versus just jumping into how we actually record things.
So like on August 9th, when it says you're paying cash for land, would you just put that in parentheses under cash? And or we're not going to get into that yet. Yeah.
Yeah, we're going to do each of these together. So every one of these transactions and every transaction we record is a separate transaction. It's recorded separately in the system. Every business transaction impacts at least 2 accounts. Every transaction that we record is going to maintain the balance of the accounting equation. So if I increase an asset account, I will either equally decrease another asset account, or I will equally increase a liability or stockholders' equity account. We won't just record one part of the transaction, we record both sides of the transaction. Both sides of the transaction will impact at least 2 accounts, sometimes more, sometimes many more than just 2 accounts. Don't write anything. Don't start in on anything yet, you guys. All I want you to write is the date and the accounts. So, can we start in on this?
Yes.
Thank you.
Yes.
Okay. Bob Morin opened a medical practice specializing in surgery. During the first month of operation, August, the business titled Bob Morin Professional Corporation experienced the following events. First things first, this is a brand new business. He is starting out on August 1st. So that means that nothing has happened. They start this period with 0 as the beginning balance for all of their accounts. He has no cash. He has no amounts owed to him. He has no supplies, no land. Nothing is owed. He doesn't have any owners yet, and there is no retained earnings. So the beginning balance for all of those accounts are 0 because this is a brand new business.
Is green a good color for assets if we're gonna start color coding things?
Yeah, you can do green. That's fine. I'm just going to use black just to write everything. Now, in this, I will show brackets, but in the regular accounts, when we actually get into journal entries, we don't use brackets in it. But in this, I will show you brackets for decreasing, positive numbers for positive. So brackets for decrease, positive number for an increase. Yes.
Sorry, just to be clear, this is for a balance sheet or?
This
I'm
is
just a little confused.
this is all of the accounts.
Okay, okay.
So we're not thinking in the financial statements at this point. We're into the details. So this is part of the transaction analysis portion when we're going to record the transactions.
Okay.
So August 6th, Morin invested $39,000 in the business, which in turn issued its common stock to him. So from the business's perspective, what was given? What did the business give?
Common stock.
Common stock, right? So the business gave common stock. In return, the business received what?
Cash.
Cash. So is cash going to increase or decrease?
Increase.
Increase.
Increase by 39,000, right?
Uh-huh.
And common stock, because we need to maintain the balance of the accounting equation, now I have an investor in my company, so I need to establish common stock. When an investor invests in my company, it increases common stock.
Is Bob Morin his own investor?
Bob Morin has invested in his company, yes.
Okay.
Am I still in balance? Is my accounting equation in balance? Do assets equal liabilities plus stockholders' equity?
Yes.
Yes. Because assets increased by 39,000, stockholders' equity increased by 39,000. So I am in balance. August 9th, the business paid cash for land costing $29,000. Morin plans to build an office building on the land. Is there extra information given to you here?
Yes.
Yes. I don't care that he plans to build an office building on it. It means nothing to this transaction. So that second line means nothing. It's just there to throw you off. What was given?
Increase land.
Yes.
And decrease cash.
So, sorry, we received land and we gave cash, right?
Yes.
Land is an asset, cash is an asset. What happened to land? Did it increase?
Increased by 29,000.
Land increased. We now have an asset known as land. And what happened to cash?
Decreased because it's paid cash.
Yep, decreased because it's paid out. The beauty of recording transactions is if you know half of it, if you know that cash decreased and you figure out what needed to happen to land and cash are both assets, they both have to balance out.
So,
And be the opposite. Yes.
do we always like mark it with just an arrow, or are you just doing that just to show us, or is that like the standard way of recording it?
So we're not actually recording it right now. This is
Okay.
not, we're
It's
not
just
in
an
the journal
exercise?
entries yet. This is an
Okay.
exercise, but
Okay.
you need to go through this exercise before you jump into journal entries.
All right, cool.
You can show brackets if you want to show brackets. I'm not going to right now. I thought I was going to, but I decided not to.
Yeah.
Okay. So am I still in balance? What's my total asset balance?
9,000.
39,000. 10,000 is my cash balance currently. 29,000 is my balance. And what about liabilities? Do I have any?
No.
No. And stockholders' equity is still at 39,000 because common stock is a stockholders' equity account and it has a balance of 39,000. August 12th, the business purchased medical supplies for $1,700 on account.
Liability.
So that account is a liability. You are correct. What liability is impacted?
Payable.
Yes. Accounts payable impacted.
And then supplies
It's increasing.
Supplies.
Increase and compayable.
Okay. So supplies, when we purchase
cash,
supplies, we now have supplies to use in the future. So it's going to increase, which is what everybody said. Increase 1,700. Accounts payable is also going to increase because now we have an amount owed. So when we have a purchase on account, it increases accounts payable. The only way to reduce a liability is to pay off the liability.
Professor Wade,
Yes.
if it was that the business purchased medical supplies for 1,700 but not on account, would that go to cash on for assets?
Correct.
Okay.
Yep. So if it just says the business purchased medical supplies for 1,700, period, it's implied that they paid cash.
Okay.
When you see a purchase on account, and you can write this in your notes, purchase on account means accounts payable. So purchases on account means accounts payable.
Thank you.
You're welcome. August 15th, Bob Moran PC officially open for business.
Event.
Business event. No transaction to record. August 15th to 31st. During the rest of the month, Moran treated patients and earned service revenue of $7,600, receiving cash for half the revenue earned and allowing some patients to pay in the future. How many accounts are impacted?
3.
3 accounts are impacted.
Revenue, cash, and accounts payable.
Close.
Receivable.
Account receivable.
Yep. Okay. Now we're looking at the impact that transactions have on the accounting equation. So under retained earnings is where revenue would fall. We're not going to look at the specific account, but I'll write what it would be. It would be service revenue. And what is the impact of revenue on retained earnings? Revenue accounts do what to retained earnings? Yep. Revenue accounts increase retained earnings. So I've earned how much in revenue this period? Or how much did Bob Moran earn in revenue?